So today, I'm gonna go over a specific company, and I'm gonna analyze this company so that you guys will know how to do it yourselves, and you'll be able to make a presentation yourself in the future. So for this presentation, I got all my information from TradingView. It's a website, and it's free, so you guys can also use it. And this company is called Enterprise Products Partners. So this company, it's an oil pipeline and storage company. So what it does is that it transports and stores oil. Oh yeah, and by the way, how I found this is that I picked a specific industry, which was oil, and then I just looked at different companies in that industry and saw which one stood out, so which one had the best stats, and then I picked that one. So these are the things that we're going to be analyzing. Usually, big hedge funds, when they pick a company to invest in, they use the discounted cash flow method, which finds the intrinsic value of a company. But for us, we're just going to do a simple analysis. So we're going to analyze the PE ratio, the revenue, the debt, assets versus liabilities, and dividend yield. So do you guys know what these are? Okay. So the PE ratio, this is the price per share. So it's the price of one share of a company divided by the earnings per share. And if it's lower than other companies in the same industry, that's a sign that this company isn't overvalued and has a good value. Then the revenue is just how much a money makes yearly. The debt is how much money a company owes to someone. And the lower the debt, the less chance it has of going bankrupt. And then assets versus liabilities. This basically compares if they have more assets than liabilities, it means they have a lower chance of going bankrupt. And the dividend yield is how much the company pays you to own its stock. So does anyone have still any questions on this?
Can you repeat the dividend yield?
Yeah. So the dividend yield is how much a company pays you per share that you own of a company. So for example, if it's 5% and one share of a company costs $100, then they'll pay you $5 either annually or quarterly, which is every 3 months. Okay, so the PE ratio of EPD is 12.77, and since this is in the oil and gas pipelines industry, we have to compare it with companies in that industry. And as you can see here, these are its earnings, and they're going up from year to year, so that's a good sign. So now we're going to compare with companies in the same industry. Okay, so I'm not sure if you guys can see this, but this is a list of its competitors, and almost all of these have a P ratio above this, 12.25. So this means that it's relatively undervalued compared to companies in a similar industry. Okay, now this is the revenue of this company. This is the annual revenue. And this is the quarterly revenue, or every 3 months. And as you can see here, you can see that the revenue has a trend of increasing from year to year. So that's a good sign, because if it was decreasing, then that could mean that the company is slowly losing profits and might go bankrupt soon. Oh yeah, and by the way, the dark blue bars are the revenue, and the light blue is the net income. So anyone have any questions about this? Okay. Okay, and this is the debt of this company. So the red bar is how much it owns. This bar is the free cash flow. So basically cash that they can use for their operations. And as you guys can see, it's pretty high, but this is actually normal for the oil industry because almost all companies in the oil industry have this high debt. And this is annual, this is the quarterly debt. And a good sign of this is that the debt isn't increasing from year to year. So it looks like they're paying off their debt.
Wait,
Yeah?
so the debt is the red line?
Yeah. Oh yeah, and by the way, this revenue here, this is in billions. So this is like above 45 billion. And this is also in billions. And this debt is also in billions. Okay, now this is the assets versus liabilities of this company. So as you can see in the short term, they have more assets than liabilities, and this is a good sign because it means that they have enough assets to keep going and pay off their liabilities, which is basically debts, yeah?
What's an asset and what's a liability?
Okay, yeah, so an asset is basically something that can be converted. Short-term assets are things that can be converted into cash within 1 year. So it's things like just cash or investments, things like that. And the long-term assets are basically things that are useful to a company for more than 1 year. So for example, it's locations, buildings, or it's long-term bonds. And by the way, bonds are long-term loans that you give to someone and then receive back interest after a long period of time. Okay, yeah, so as you can see in the short term, it has more assets than liabilities, so that's a good sign. And then in the long term, it has way more assets than liabilities, so this company has a pretty low chance of going bankrupt. Okay, and my favorite part about this company is the dividend yield. The dividend yield is 6.55%. So this means that you will get 6.55% of what you invest every 3 months. So if you invest like $1 million, you'll get like 6.55% of $1 million every 3 months. So that's going to be a lot of money. Yeah.
Wait,
Mm-hmm.
so like how is dividend yield calculated and why is it 6.55?
Well, the company just says its own dividend yield. It's not calculated. The company just decides how much they want to pay to their investors. Okay, so this is the conclusion. I think EPD is a good company to invest in because it has growth potential and pays good dividends. But let's vote right now to see if you guys also think so. So raise your hand if you think it's a good investment. Okay, and raise your hand if you think it's a bad investment. Okay, so our plan for the next meeting is to have all of you guys also make presentations on specific stocks to invest in. And we'll basically do the same thing. You guys will present, and then we will vote if that company is a good investment. Because this is basically what like top tier investment businesses do. They have one person make a presentation, and then the rest of them vote on if it's a good investment or not. So this is what we're planning to do.
Madison Gable, please come to attendance. Madison Gable. Dustin Hershey, please come to attendance. Dustin Hershey, please come to attendance.
Okay, anyways, so, and after each presentation, I'm going to keep track of every company that you guys presented, and then at the end of the year, we'll see whose company went up the most. Okay, thanks for coming.
Does that person get any kind of reward?
David Silverman, please
To
come to
be
attendance.
honest, I'm still thinking about that. There might be a reward.
David Silverman.
Like In-N-Out gift card or
Yeah, yes.
king size Snickers bar, something like that?
Yes, something like that.
Nice.
Oh yeah, guys, and by the way, EPD has its earnings report tomorrow. So if it's above expectations, it might go up a lot. So that might be a potential investment opportunity for you guys. Okay, anyway, thanks for coming.